What's going on, guys? Back at it again, Young Money Hackers. Thanks for tuning in. We are talking about tax benefits of owning a property right here in Australia. It is a big question. It's people have no idea what they're getting themselves into, the benefits, and of course some of the duties that are attached to it as well. I certainly think that there are more benefits of owning property in terms when it comes to tax. So let's unpack that today. Just before we start, though, that this is not any tax or financial advice to anybody. If you are requiring tax advice, go see a tax agent or a tax lawyer. They will be the best person. They'll be the best suited professional to give you catered and bespoke advice as to how you should navigate your taxes. But let's unpack some of the things that we can be looking out for. Maybe some of the keywords that we can start Googling, so that we can own up this research and dip into some of the tax benefits of owning property. So what do you know? What do you know, Charlie? What are we doing today?
Okay. So one of the common tax strategies that people love to talk about is negative gearing. And this is a bittersweet topic for me because I want everyone to know that negative gearing is a perk of property. It should never be the outcome. It should never be the focus, right? Because what it essentially is that if you own a property where the expenses of that property, so the interests, the maintenance, the rates body corp, and the depreciation of that building exceed the amount of income that is coming in through rental income, you're essentially getting a tax break for the loss of the money that you're paying every single month on a timely basis. So that's cool, better than a poke in the eye, but you're losing money, right? So the idea here is that while negative gearing it has a time and a place, it should never be the sole outcome.
Exactly.
That's one of the first things that I'd like to say. So for example, if you're earning $80,000 a year, and you have this property where your net loss is $10,000 a year, that 10 grand is offset against your nominal tax rate, your taxable income. So you're now only taxed at $70,000.
Now, this might sound good on the surface, but I also totally understand what you mean by bittersweet. But let's think about why somebody would do this, right? Because yeah, I mean, they don't want to pay tax. But the thing is, why not? Why do people hate paying tax? I mean, if you tune into this episode because you're like, oh, I don't want to pay tax. Well, let me give you a bit of a challenge. Is that the day you write a $2 million check to the ATO is the best day of your life because it means you made $4 million that year. Who the heck is complaining? You know what I'm saying? So it's people have got it completely the wrong way around. I mean, if there are breaks that we can see, yeah, then that's what we can benefit from making money, from doing business, from owning a portfolio. But like you said, that shouldn't be the end goal. And of course, that's not the only benefit of tax. So what's another benefit? What do you know?
Okay, so there's long-term capital gains tax, which is another one, which is basically when you buy a capital asset, this could be property, could be stocks, whatever, but a larger asset like a property, if you hold that, or if you make a profit, a capital gain on that, and you sell that, you're going to have to pay capital gains tax. Now, that's usually charged at the rate of your nominal taxable income, right? Which can be a lot. That's not the ideal situation. So if we hold that asset for longer than a 1 year period, that capital gains tax that you pay gets chopped in half. So you only have to pay half the amount of capital gains tax. And on a large asset like property, that can be a good thing. Not that I would sell. Ideally, you want to buy properties where you don't want to sell them. You want to hold on to them and start the snowball effect. But if for whatever reason you do sell, that is one of the perks of long-term CGT.
Exactly. And speaking of CGT exemptions and deductions, of course, if you live in the house, if it's a PPR, principal, primary place of residence, or if it's your main residence for a year or longer, for 12 months or longer, then obviously that gives you a full tax break. There's obviously other terms and conditions attached to that as well, because some people choose to live in it for a year and then rent it out, or rent it out first and then live in it for a year and then rent it out again. And so there are different conditions around that, but definitely living in your own home for about a year is actually not a bad way forward as well. That is if you do consider selling. Now, I'm not much of a hold up, Young Money Hackers. We got some exciting news to share with you because it's all well and good to hear what's going on, but we'd hate to see our Young Money Hackers only listen and take no action. So we've been working on some game-changing tools that we wish we had before buying our first investment property.
Exactly right, man. And it all starts with numbers. Property investing can feel like an extremely overwhelming process because it's the biggest financial decision that most people will ever make. So we have developed a property investing calculator that will make this whole process effortlessly. And seriously, man, I'm actually so blown away at how easy they are to use. All you need to do is put in your numbers and the info will tell you if that property is worth it or not. I'm actually so proud of them. Genuinely can't wait for our young money hackers to get their hands on this experience. But that's not all that's new here. We also have a mentorship experience.
And that's right, we want to share with you all the juicy details to see you through to that end goal where you're profitable on your property investments.
We also come across so many investment opportunities given the property space we play in, so it'd be rude not to share those with our young money hackers. So if you'd like to get your hands on some of the deals we are talking about on the podcast, we are offering acquisition services where we and our team will hunt down properties for you to push the button and get started to add to your property portfolio.
And what a dream it is, Charlie. And there's more. We're going to hook you up with top-notch property finance and insurance so we can all sleep at night.
But HD, what if I don't have the money to invest in any of these services right away? Is there anything for free?
Well, actually, we can help you with your finance and insurances for free. Plus, there are a ton of free resources we have for you, like some of the investment calculators, books, and tutorials available on our website.
Well, you heard him, everyone. So head over to our website, youngmoneyhackers.com, or simply click the link in the description. Check out our investment calculators, learn more about our mentorship program, and explore our acquisition services. At the very least, don't miss out on the free resources we've put together to help you guys get started. Now back to the podcast.
I don't know. I don't, at the beginning, for the young money hackers, the listeners out there, I don't really recommend buying a house to live in at the beginning per se. I'd say buy a good investment, and I'd say don't focus so much on selling or the capital gains tax. I mean, the fact that there is tax to be paid is already a good thing anyway. So I wouldn't focus on so much of that at the beginning, but that's what I'll focus on. One thing that we didn't talk about is I want to circle back to the idea of depreciation. I think depreciation is one of the sweetest things about tax breaks is that it's actually it's not actually losing money per se, but it's a depreciation on the bricks and mortar of your property, which then all the income. If you have a highly positive cash flow property, if you're lucky enough to have something like that, and it happens to a brand new property, then you can actually claim depreciation on the property itself, which isn't an actual losing all the money or anything like that, because the property itself has gone up in value, but just from depreciation of the bricks and mortar and the parts, the doorknobs, the windows and everything, that depreciation can actually offset the income that comes through your property. And depending on how you're structured, it could be a massive, massive, massive tax break. So I think that's something that that I think if you are doing any capital works to your property, whether it's by building a brand new build or even changing the fixtures within your property, I highly recommend that people get in touch with a depreciation schedule specialist, so that you understand how much of it actually depreciates, so that you can offset that in your income on a yearly basis. And if that actually makes it that your net income is zero, well, hey, you've just made a tax-free income, which is totally dope.
Exactly. Yeah. Getting a site surveyor will really, really help you not leave money on the table. You know, a lot of people don't even know they can do that.
Exactly.
It's the great thing about it is that it's on paper, right? So like on paper, the building and the bricks and mortar and the things within your property, like the oven and the blinds and the carpets and the flooring and everything like that, it has a lifespan. So on the depreciation schedule, different parts of your house, the building and the materials have different lifespans.
Exactly.
And that's how they calculate those deductions. So your flooring might have a 12-year lifespan, whereas your oven might have a 5 or 6 year lifespan. It's all taken, the surveyor will take all of that into consideration.
Exactly.
And then whatever that tax deduction is, you get to offset that. And it's just a hack.
That's right.
Because we're hackers.
Because we're young money hackers, baby. And that's it. That's what we
Exactly.
I want to talk more about some of the more complex issues as well. Like, you like your structure. Do you want to put a property in your own name, in a company, in a trust, in a family trust, in a unit trust? How do you do it? Well, hey, that comes down to exactly the situation that you're in. There is a way that I preference to structure it in a way that considers, I know it's ridiculous that, we're talking about this, but as young money hackers, we've got to think about what it's going to be in the future, right? So we look at succession planning as well as, tax brackets, and depending on the number of members within your family, you got to think about what is the best structuring process as well. And that's something that I would like to speak about, but because it is so bespoke and it's so tailored to each individual needs, this is where I would say then, work with an accountant, work with a tax specialist that will advise you in a direction. Now, I would give you a tip that when you do look for an accountant, ask the accountant, hey bro, how many properties you got? I think that's a really important question to ask, because there's a difference to it. Accountants learn the same thing, but one will specialize in a certain area than another. So I would totally be looking for accountants that actually know what it means to own multiple properties and how to best structure that, rather than working with accountants that's just like, yeah, I know how to do a tax return. You know what I mean? Because everybody knows how to do that. And so I found that like in my property investment journey, just finding the right people to work with has been so helpful in putting me in a better financial position, so that it actually helps me to grow with each professional that I engage, rather than each professional that I engage is just more money out of the bill, but they actually give me more tips and tricks, which I think is very, very important. So make sure you've got the right team around you: the buyers agents, the lawyers, the finance brokers, the accountants, the pest inspection people. We talked about this in the previous podcast. I think that team is so important, and that's the thing that we want to do in Young Money Hackers, is that we want to build a relationship with you guys so that we can be helpful in this way. You guys can form a community, and that way you guys can exchange ideas and knowledge about what you're finding out there in the marketplace, so that you're finding the best opportunities and you're finding the best savings and tax savings in the current marketplace that we're in right now.
Exactly, because we're here to give you ideas, but we can't tailor a specific outcome. We can't give you guys exact advice on this podcast. So it's up to you guys to find the right team. And yeah, it's a make or break kind of thing. Like having the right team around you will be night and day difference.
Exactly right. So thanks so much for tuning in today, guys. If you have enjoyed or learned something from us, if it's the first time visiting us today, go check out all the other episodes. Make sure you go like, share, subscribe, and ring all the notification bells. That's if you're on YouTube, but of course on Spotify. Make sure you follow us. Thanks for tuning in today, guys. All the information and the helpful links are available in the description below, and we will see you next time. Peace.